SBA EIDL Loan Increase Update September the 8th, 2022. How to get 0% interest for 6 to 18 months as a startup, non-startup, newly established business, the PPP program, ERTC, grants, business loan broker tips and strategies and partnerships and having the right roadmap. I'm going to be covering all of this in this live video for you today. But before I get started, my name is Michael with Viral Funding Solutions. And if this is your first time, I am a business loan broker expert who's been gratefully been able to help a lot of businesses get the right type of financing to help them continue to build, grow, expand, and even get out of a tight pinch. And that means just about every industry I've seen out there. I've specifically worked in some more than others and a lot of experience with just about every business out there. So I know what problems, what roadblocks, what questions, what actual results you're trying to get to, and so much more. And I come out with a lot of things on this channel, as well as credit repair, how to do it yourself, how to have it more done for you, business credit building, taking advantage of different opportunities as they come, and so much more. I'll link you to all this information down below in the description, as well as a free questionnaire form you can fill out to get a very personalized and customized email response, on your best funding option and options, thoroughly broken down from introduction to conclusion. In the meat of that, you'll see things like those services, the qualifications, how they work, numbers if need be, comparisons, analysis, and then a conclusion as in what you should do, what the roadmap can look like, some bonus tips and bonus material along the way, how to get a hold of me as well. So if you're watching right now on the live, please give me a hashtag live in the comments or a hashtag replay. Also, let me know, where are you tuning in from? We always get new viewers, and we see people all across the US, Puerto Rico, Canada, Nigeria, and quite a bit more. So we have a whole broad full of audience members who do come in from time to time. You'll probably come in for a little bit. You're busy. And I get these videos can go a little bit long, but I'm going to try to keep it short and concise and to the point. But I see a comment right now. Be careful, guys. When this video is published on YouTube, there are those who I'm not associated with who will tell you to reach out to them. This is the best person to get a grant from, or reach me on Telegram or some other channel. I'm not associated with those. So when, again, this is published or this is happening now because I see a comment there, please ignore those people. They are very shady. A lot of them are scammers. So be very careful about approaching. And they do what's called like a follow train. If you've seen this, they comment one and then another person comments underneath that, and they like start trying to make a conversation where it sounds very appealing. Again, I'm not associated with them whatsoever. So I'm going to jump right into the EIDL loan increases, and then I'm going to get into what we have for our format today, as well as talking about getting a monthly repayment, which I have a video on, and there's content that I've already released on it and more updates. So the EIDL loan increases right now, just a lot of unlawful activity, a lot of legal issues, a lot of people submitting more complaints more now than ever. A lot of people not abiding by how they should have been using those funds. People can't get through the appeal process even though they submitted something, and that's because they have more or less been shut down. And the senators and the administrators haven't been looking through all that information. So the constituent advocate, small business advocate, and a little bit more. Now, on top of that, it is a bit of a difficult process to say if they're going to approve funding within the next couple of months. You guys know that the repayment schedule is coming up here in October for many of you. So make sure you are on top of that. You have your CAF system built or put together, you're logged in, you're a member of, should by now. And then there's a process of going through the SBA to make sure you make your payments. I created another video on that. I'll try to link you to down below. If not, you can do a quick search on my channel, type in repayments, EIDL repayments, and you'll see everything that I broke down, even went on share screen, I believe, in that one. If not, it's okay. I still want to walk you through what you should do step by step. And I've been speaking about a lot of content on the EIDL lately. If you haven't been following me, I spoke about the appeals and quite a bit more. So it's more about a repayment schedule coming up. The deferment will be much harder to say yes to. People will want to come back more so during the winter time. I'm going to see it a lot more in the coming year, after Christmas, after the holidays, more than ever. where people are going to want that recovery. They're going to want to say, hey, can I get this deferred for another 3 months? Another 6 months would do me good. But the SBA hasn't come to terms to say, yes, we're going to allow you to defer your payments in the upcoming year. Maybe in a year's worth from now, between now and the next year, 6 to 7 or so months, but it's quite difficult to say that. Again, I'm seeing a lot of people in the comments who just be careful of. Sometimes they come and do this to not only my channel, but many others. And I'm just seeing a whole bunch of these spammers. But if you're in here watching, you know that already. You've been seeing me for some time. So the EIDL loan increases. A lot of people are still in the queue. There are a lot of funds available. However, it's not being dispersed. I know I sound a little redundant if you heard me say this in the past, but I want to keep you guys up to date with what I know, what the loan officers know, etc. So it's most important that you know that it's not being opened, the vault per se. Think about it as like you're walking into a bank and you're requesting your account. You've seen in the movies where they allow you to walk back and get into your account, open it. So that's not what's available at this moment, unfortunately. But just be on the lookout for repayments. A lot of fraud happening, as I mentioned, a lot of unlawful activity. Lawsuits are on the horizon, and just quite a bit more. Now, in terms of getting 0% interest for 6 to 18 months, that's what I want to draw our attention to next. And this is going to be a good program for those of you who are a complete startup, newly established, or you've been established for some time. And I'm going to show you how you can possibly get 0% interest for 6 to 18 months. And I want to let you know before I get into the share screen that this can be a process. Don't expect to get funded within a month or two, more so 1 to 3 months. And what you're doing is you're building out your credit profile, your personal, you're building out your business credit profile all together. And you're building that business credit on top so you have a better paydex score. So you're more attractive to a lender outside of using credit cards. A lot of people come to me and they go, I don't want to use my American Express card anymore. I don't want to use this Capital One Spark Builder card, or I don't want to use my Chase Inc. card, my Wells Fargo. I have like credit debt up the roof. My personal credit is suffering. My business credit hasn't even been built, or it has been, but I've been putting too much strain on it. I haven't been building it enough. So what can I do, Michael? I'm just starting my business right now. I have the idea. I know what I can project to get into 10 to 20,000 or so. Most businesses who are getting started are looking for somewhere between 20 to 200,000, 20 to 300,000. It's a tough ask when you're somebody who has no revenue, pre-revenue, and you're asking for 50,000 because I want that used truck or whatever it is I'm trying to do, but there's no revenue to back it up. Or you have revenue, it's just not sufficient enough. Maybe you came in and got applied for a cash advance, a term loan, a line of credit, etc. Or you're trying to get an SBA loan, an express loan, a standard express loan, a export express loan, cap line program, revolving credit with the express. And there's a few more other circumstances, but you don't bring business credit. You're not even wanting to even take the time. I have a lot of business owners right now who do not have any business credit established. They're doing like 500,000 and above. They're doing $1 million and above. They haven't even set up with Dun & Bradstreet, Experian, and Equifax. You're going to want to set up with all three of those, not just one. You're going to want to build those profiles out, have some accounts reporting, have some reporting trade lines, and you're continuously building your business credit because it'll allow you to get access to 20, 50, 100,000 in multiple credit cards if need be, or one, however much you need, but it's for your business, not underneath your personal. So let me jump into the share screen right now. And all this information I'll link you to down below if you want to learn more about the 0% interest for 6 to 18 months and what I'm doing and what I've been able to do myself. So let me go right here. Again, be very careful of those commenters. I'm seeing them just, if I could just kick them out of here. I don't know if I haven't done that before to anybody, but I'm not going to do that this second. So let me open up this document. How to get 0% interest for 6 to 18 months and up to 150,000 plus without any very limited documentation needed. This is very legit, everyone. But what I want you to know before, again, you see any of this information, and this might look familiar if perhaps I emailed you it through a questionnaire. You may have received a little bit more based on your circumstances, so it's more customized. But if you're struggling along, I speak to business owners every day. Help me with my startup. I'm starting a trucking business, a construction business, a salon. I'm going to file bankruptcy. I'm going through foreclosure. I have open tax liens, federal liens. I'm trying to do this thing with my medical imaging company. I've heard it all. Like I said again, I've been and helped about every industry. And if there's one that emerges, it's probably a new one or one that's just been kind of tucked away and doesn't need financing. It's only financing itself through its own cash flow. But what I'm seeing a lot of the time, especially with startup companies, a lot of the time you are just trying to find something that doesn't literally exist. Where's that private lender that can give me 50,000? I know it's out there. Well, perhaps a personal loan. I'm going to get into some of these options in a moment, but I created another video I'll link you to down below, or you can find on my channel, where I talk about how to get startup funding. And business owners come into this thinking, well, it's just going to be quick. In about 24 hours, I'll get 50,000. If I don't get it in 24 hours, I don't want to have nothing to do with Michael. That's very shallow. And in a way, that's also a bit disrespectful, not to myself primarily, but to yourself. It's a lack of disrespect. And it's your obligation and your duty to have an education with this information that I'm giving you. Those of you who keep showing up, there's a reason why you invest your energy and your time, whether you receive funding or not. But for those of you who just come in and get out, you guys don't understand what you're applying to. A lot of business owners come in and go, yeah, I got a loan already, but I'm going to apply for another one and I'm going to get a better rate. I'm going to get better money. I'm going to get better terms. Who are we kidding? Why haven't you taken the time to speak with me? You've probably been let down. You've leaned your shoulder on someone else. You put your hand already around them because they emotionally fluffed you up. They made everything sound gooey and ooey. They made you sound like, yeah, just come over here. I'll overpromise them and underdeliver without them telling you. You've probably spoken with 3 or 4, or a representative, some financial advisor, a team of people who don't know what they're exactly doing. I set everything straight. I'm a very punctual person. If I work with a team, if I work with myself, I'm getting feedback from the underwriters and giving it back to you. I'm speaking to my lenders directly. And then there's indirectly through a brokerage, where I have already those direct partnerships, but I'm working with them here because it's better to have an in-house setup, especially in today's market, which I help a lot of people in. And that's honestly going to be your best solution over 50% of the time, over 60% of the time. There's a very limited amount of people who I could say, yeah, let's go to this lender directly first because you've been proven, or they will look at your file differently. But if you're just new, or if you've already had some time, it just hasn't been going right, this is the best direction. In a lot of the cases, it will be over here as opposed to in this way. So until you understand, don't judge. A lot of people come into this going, well, I feel like I should have gotten this. Why are you showing me that program? And I'm not saying this to be rude, guys. I'm not saying this to be mean or aggressive. This is me giving you tough love. Those of you who show up know how I am. I won't beat around the bush. I'm nice. I won't always be direct. But when I am, it's ferocious. And I'm an introvert. And so when I have something to say, it's in your best interest to listen. Now, let me come back to this document. So this is the credit line hybrid option. Here are just a few sentences that I want to read and I put together for you. How would you like to get up to $150,000 in unsecured no-doc credit cards for your business, even when the banks say no to you? You've been let down time and time again. Banks keep coming to you, or you keep going to them, and you just waste this energy and time just showing up, talking to the bank manager, sitting down and speaking with people where they can't figure out your situation. They probably don't even know the alternative. The credit line hybrid is designed to help you get funding strictly based on your personal credit quality. And here, as you can see in blue now, it's a 680 plus on all 3 consumer credit bureaus, Experian, Equifax, TransUnion, etc. Plus, our lenders will not ask for your financials. This is the benefit of going through this program. Bank statements, business plans, resumes, or any other burdensome documentation requests that most conventional lenders will demand. And I'm telling you this from firsthand experience, everyone, that I deal with this every single day. And I love it. I'm not saying it like as in, oh, I do. No, I love this. This is my favorite thing. Whenever I get your documentation as a business loan broker, I gather the documentation, I evaluate it, I analyze it, I pre-underwrite the file myself before it goes straight into the lender. whether that's sent to me directly or we have our portal where you can safely go through our online application, sometimes PDF and or usually it's online these days, and I get to see it. We get to see it in our back office, in our portal. Before anything, I can send to one lender, or maybe there's two lenders if we go the brokerage route, or a couple more. And the difference with that, if you were to go that direction, it's not like your information is being violated. It's protected. It's safe and secure. When people ask me, well, a couple of lenders be seeing it, we can limit it to one that I know directly, or we can limit it to 2 to 3. However, we're going to protect your information. We're not using that, and we're not giving you like multiple inquiries. We're not shooting this information to anybody and everybody. Your privacy is protected. We're just kind of flirting with the idea if this lender is willing to come in, well, I know this one is actually best, but this one could give you more funding, and it can give you probably a little bit of a higher rate, but the benefit would make more sense if you took this amount first for what you needed, and then probably we can increase the term a little bit, or we can go a little bit backwards, but it gets you more funding and a little bit more flexibility with this partnership. So it makes sense, and we're going to protect your information. It's not being used against you. And so that's what I say to a lot of individuals, and there's more to that, but I'll leave it at that for now. So again, as I said, our lenders that I work with will not ask for your financials. Let me put this over here in caps lock, and let me bold it. And then let me put it in red. Not ask for your financials, bank statements, business plans, resumes, or any of that, like I mentioned. And I deal with this a lot with higher documentation funding outside of the credit card stacking, and this is what it is. We're dealing with SBA loans all the time. Every day I'm dealing with them. And I always get a better understanding how to pre-underwrite your file for your specific industry and for your specific purposes. Here's the best part. You can get an approval with introductory rates as low as 0% interest for 6 to 18 months. Giving this program the best terms, get this, in the country. Here are the benefits. And there's more of this that I can communicate with you. And I have my network, my team, we follow up with you. And I'll be with you every step of the way. And I can ensure what's happening and I can see what's going on. But over here, you have the benefits. 24-hour pre-approval. So similar to what you would see with like these kind of term loans, kind of cash advance hybrids. Sometimes the line of credit, the little lines of credit kind of like drag out 48 to 72 hours in a lot of cases. 0% interest for 6 to 18 months. That is freaking incredible. Let me put that in blue here. If you're not listening right now, if you're just plugging me out, you just came in here to learn about the EIDL loan, and you're a struggling business owner who cannot get funded through a private lender, non-private lender, you can't even go through PayPal, Square Capital, Shopify Capital, all these different other services, then what are you doing is my question. Are you picking your nose? Are you saying, oh, I'm going to go an alternative way. This guy doesn't know what he's talking about. I'm just going to go and find family members who can fund me. Oh my God, the hassle then you go through, the time you spent, they gave you very little or nothing, no help. You spent a conversation. You probably took them out to have coffee. Oh my goodness. What are you doing? Even startup businesses can qualify. Okay, let's come back up here. Business credit, that can also be used to help you qualify. So that is an extensive portion to it. Business credit aside, if that's something you're interested in learning more about, I have a free business credit video series. I believe it's down below underneath the about this video, which I have to change a little bit, or there or just above it. But you'll see a free business credit video series that I put together. Yours truly, have some content in there, and I can show you the process of how to build the foundation. And that'll make you more of an attractive client when you come to a program like the Credit Line Hybrid. So you don't have to necessarily think of it that way, but you would, if you could start there, great, and then you can move into the Credit Line Hybrid. But it doesn't necessarily have to be set up that way. So you can start off right here, and it can be very helpful to you. So business credit can also be used to help you qualify. Definitely shifts the momentum for sure. You can start off with a greater amount as opposed to somebody who didn't even start building any kind of business credit. Flexibility, and I see this a lot. It is the difference, guys, just so you guys know, especially when you're building your business credit and how you're applying to which vendor programs and what you're doing, building out your trade lines over time. That makes a significant difference. So flexibility, you can use the funds to do what you need now to do for your business. Even startup businesses can qualify, and that's the premise of this video. If you're a startup business owner, even if you're not, I have a lot of business owners who are not startups. They turn to this program like within a heartbeat. And it might not be their first because they can get approved for different financing. But guess what they're doing? They're not only building their business credit, they're also getting access to 0% interest for 6 to 18 months. Now, obviously, you have to understand that if you're getting 0% interest for that amount of time, what are you doing thereafter? So the purpose of you taking that funding has to make sense. It has to generate for you a good ROI. It can't just be used for sustaining and trying to pay off any kind of debt without expecting that you won't grow in some capacity. I'm not saying to a 10%, 20, 30, 40% plus scale, but any percentage above in profit margins, gross profit margins, net profit, profitability, you have to think about after those 6 to 18 months, what position will I be in by then? So think about what you're using this for. Business credit can also be used to help you qualify. As I said, flexibility, you can use the funds to do what you need in your business. So similar to getting a lump sum, it's your choice how you use this funding. I got approved for 70,000. Man, I got 70,000. Thank you. Now, guess what? I bought a truck for 50,000 that I needed. It wasn't the best, but I have it. It's going to get me another 10 to 20,000. I'm paying this off 6 to 18 months, 0% interest. God, man, if I would have just known about this and then I build up, now I'm getting approved for an SBA Express loan, the standard loan. I also got an unsecured term loan, a line of credit, or a cash advance on top of that. Holy smokes. I am on freaking fire. You cannot stop me. You see how this works? True no-doc fund financing program. And you guys should see the process that you go through. This is the most seamless, straightforward, no hassle process that I've seen across any other program that I've ever been into, that I've spoken to, I've been in. If you guys do not understand the value of credit cards, understand the value of how much of it you should be using, what's the percentage, what's the AIR, the APR, what is it that it entails with interest, how much you're accruing over month to month. I know it can stack and be a bit higher, but you have to understand the purpose of what you're using that funding for. You're going to have more cash flow in your business at the end of the day. Is it going to help you retain that? How are you going to be paying other credit cards off? Think about it very thoroughly. And you can always add on top of more programs if you qualify for them, either now or in the future. Application to funding, it is in 3 weeks or less. So you can say it's not as fast. 24-hour pre-approval is one thing. The application to funding could take a couple of weeks. However, it's nothing bad. The price you pay for getting that funding, waiting 3 weeks as opposed to a full month, or as opposed to going through the SBA and waiting 6 to 8 weeks, usually it's specifically in a different industry, depends on it. If it's a higher risk and we have to gather more documentation and how fast you supply us with it, it could drag out to about 2+ months, 3+ months. But I'll talk about that with the SBA 7A. If you guys want to learn more about that program, I'll link you guys to it down below in the description where I talk about the SBA 7A 504, what I recommend, how you can use a hybrid format, and I'll get into that shortly. No upfront application fee. Wow. Usually there shouldn't be. And if somebody's trying to get you an application fee, you should usually run for the fences. I see a lot of business owners out there who are also like, can I get it without a personal guarantee? Well, if you're just getting started, you have no leverage. You haven't even increased. You haven't even sought out the kind of help you need, no experience. Then going for a no personal guarantee is really difficult to, and you should just sit on it. Think about it. Why would somebody offer you no personal guarantee? You're a liability. Right now, you're in the liability column. You're not an asset. As hard as that sounds, and I love you, you're a liability to me, to everyone, the credit card companies. How can we offer you a no personal guarantee when you're looking for just getting started, or you haven't built enough experience for them to say, hey, you've gone to a level, or you've gone to a corporate level with these corporate credit cards where we don't really necessarily require a personal guarantee. You're in great standing. You've proven you want to use our card. You've proven that you want to continue to grow. And there are more hurdles you have to go through, more documentation, stuff that has to be assessed, evaluation of a few things, how you're using your funding and so forth. So no upfront application fee. Credit approvals are up to $150,000 per individual, and they could get more, especially if we're talking about like corporate credit cards and a few things without a personal guarantee involved to some circumstance. So 150,000 per individual is what you're likely going to see. And not everybody starts there right away. So you have to build. Nobody wants to be told, oh, I got to build something. Well, how did you build your business? Uh-huh. What, somebody just gave it to you? Your mommy gave it to you? Daddy gave it to you? Oh, I just bought a business. Yeah, but didn't you still have to figure out how the foundation of the business is? If it's rotting, is it actually working fully? After my foundational step, then I work to my second and then my third. Right? A lot of us expect, we feel entitled. Well, you don't know me, Michael. Maybe I don't. A lot of you I do know on a personal level because you've opened up enough, and I appreciate you. I'm not saying you have to give me your whole world. There's some more than others, and it's by no means saying that I prefer one person to another. It's just however much you prefer. And I'm an introvert too, so when you speak to me over the phone, you'll probably get a laugh, or when you see an email from me, because of how quirky sometimes I can be. Not well, sometimes maybe nerdy, but you'll hear it from me. But you'll get the best for sure when you work through me, and I will take care of you. I've been getting a lot of people lately who have actually been referring me. So if you're in here watching and you've been one of those, I greatly do appreciate you. I spend a lot of time in this market. I know what the underwriters and the lenders want for different services. I will follow up with you along the process. I will be primary email contact. I will be secondary CC'd a lot of the time, so I know what the underwriters are doing. We just have to have a follow up with the lender or a connection with the underwriter, or it's an advisor in some circumstances to a degree, or a higher up. And then we're always in collaboration with one another. So it works in various ways. So just look at it like that, and it'll be in your best interest. So no collateral requirements. Amazing. Wow. No collateral. You're telling me I can get 0% interest for 6 to 18 months? Yep. Without collateral. Ability to use credit partner or credit partners to qualify if needed. So a guarantor. Have you thought about that? Somebody that can put you on their schedule, put you on their file, and they can say, hey, I'm liable, but you have to bring me your trust that I can sit on, because if you use, for example, a family member, you better be on top of everything, right? You better not be hurting their score. You better not be taking on more than what you can chew and saying, yeah, I can help you with this, paying it back. And then the agreement falls off. It was just a verbal. You're getting onto all these issues. I've seen people go into court for this. And yeah, I've seen it with families. So don't be that individual who goes, yeah, I'll get it done. But if I'm your family member, which I am here, I'm going to ask you, what is your business plan? What are your projections? What do you see happening in 3 months and 6 months, every 90 days? What about in a year to 2 plus? What will you be in? Oh, well, this is what the market is telling me. I'm hearing something different from you. How can I confirm that? Right? Yeah, it holds no valuation when I can come up with my own and I say, hey, this is actually what the market is speaking to. You have an emotional investment. We need to see more of a logical investment into this. So no cash flow requirements. Awesome. Look at that. Not even having to look at your cash flow like an SBA loan. We reverse engineer from an SBA. We're probably talking about the secured term loans, lines of credit, unsecured options, quite a few more. So no cash flow. We're not even looking at the bank statements. Oh, what do you want? Oh man, you're telling me I can have these inquiries? Telling me I can have these non-sufficient funds, chargebacks, overdrafts? Wow. No cash flow requirements. And to a degree, you have to be careful about what I'm saying in terms of chargebacks and negative days and what is actually going to be reporting on your credit. So when we take a look at those things, I'll get into it in a moment. So no collateral requirements, ability to use the credit partners if needed. If needed, again, if you have quality credit, it's fine. No cash flow requirements, can help you build or improve your business credit score. Amazing. Like I said earlier, who wouldn't want to improve their business credit score by doing this? Now you're getting access to 10,000, 20,000. It's incredible what I see. I see a lot of individuals who come to this, and it's just amazing transformation that I see. And then those who do come back and then just expected a different result, trying to do the same thing. They're like knocking their head on a brick wall. You don't need no. You know what I mean? Like they're speaking the song from Korn and a few of the other artists. and going into like Pink Floyd status, and I don't want to go too far ahead, but you guys know what I'm trying to address. It's just you're banging your head against the wall. Why are you doing that? When I've shown you how to do this, can help you build or improve your business credit score. Wouldn't you want to have your paydex score improved? Look at your Experian, Equifax, DNB, LexisNexis, and a few other of the reporting agencies that are not easily seen or focused on. So many don't report to personal credit, but some will. And that's just common, especially if you're just getting started, you're new to this, you haven't built enough limits, increases, not enough of a profile, then you'll be expected to do this. But like business credit building, where things are not tied to your social security number, rather EIN and so forth, there are a lot of advantages there. So you're separating the two. Qualifications, like I said, a 680 plus credit score on all with all three consumer credit bureaus. And I said that who they were earlier. Credit card, 3 years old with a $5,000 plus limit. So this could be for many of you already a position where, hey, I don't have that. Credit card with 3 years, but we spoke about the guarantor position. Remember that. So credit card with 3 years old with a $5,000 plus limit. And the majority of you already have this. Personal be that, business credit be that. Must be a primary card though. Okay. So that can be a variety of things. Speaking Visa, MasterCard, a few different things. But when we're speaking about credit card stack and getting into business credit, we can make a further assessment there. So minimum of 2 open, and I put the number 2 here just so you guys see this. It's minimum of 2 open revolving accounts with a 1.5 years of good payment history. So this is now where we're getting into, hey, what are the credit reports telling us? Minimum of 2, again, open revolving accounts within a year, with a 1.5 years, of good payment history. Not bad. We're talking about good. So whatever you need to clear up, whenever it needs to be taken care of, you handle that. Under 40% utilization on all revolving accounts. And that's rather generous at 40% when you get to 35%. And we're not even talking about debt to income ratio or any of that right now, but 40%, under 40% utilization on all revolving accounts. Can you get to that number? No more than 4 unsecured accounts open in the past 12 months. Anything unsecured, derogatory or not, that's not what we want to see. No more than 4 to 6 inquiries pure bureau in the last 6 months, preferably less. So a lot of you guys right now seeing this part would have already been knocked off, because I can tell you how many people I get who apply for personal loans, startup loans, these kind of credit cards, other credit cards, they don't get approved for because they have more than 4 to 6 inquiries per bureau, pure bureau. I'm not saying one. And this is in the last 6 months. So that's recent, preferably less. So make sure you take care of that. What I'm speaking to as well, for those of you who are already struggling with these things, is think about how can you fix your credit? Is it something you can do on your own? Are you doing this with more of a done-for-you system? I'd rather have the done-for-you system, whether I'm paying a few $27, staying on for $100, however much. I would prefer that to deal with an expert than have somebody refer me a freaking software. They don't do, you know what I mean, SHIT about it. Or you try to do it yourself. You only complicated the issue. You thought you disputed something correctly. You weren't using Metro Fiber. You weren't doing correctly what you should have been. So if you need help fixing your credit once and for all, those of you who just speak and don't do anything about it, don't do this. But for those of you who may be telling yourself here, or you may be saying it to me, and you will act on it, then I have information for you down below for credit repair. I think it's still there, or I will update this in time. And again, if this hurts, if you think I'm being aggressive and negative, I'm not. This is just me giving you tough love. I want you to come around and think, damn, this guy really does have my best interest at heart. And I say that in a personal way. So those of you who do come by and receive the help from me, I'm opening my arms to you. But don't take advantage of my energy and my time. I don't want anybody wasting my energy and my time, first and foremost. That's why I'm able to turn down files. I'm able to turn down people, even if you're doing millions. If you're there who I said this recently that to a member who's trying to kind of learn what I'm doing, and he's still learning the ropes. He's got a long ways to go. But under my mentorship, I just let him know, hey, there's a lot of people out there who are going to be tire kickers. I don't care if you're doing less than 300, over 300,000, you're doing millions per month. If you're rigorously bad at being open-minded and giving feedback, nobody will want to work with you. Maybe somebody will who's just trying to earn something. Me, I can turn down business if I want to, but you're working with the best. Just so you know this, if you choose to go a different direction, go ahead. If you feel that's going to be the best for you and you want to continue to be put down, overpromised and underdelivered, which happens because not a lot of people know what they're doing in the space. Or do you want to come to somebody who's going to quite possibly give you tough love, who's going to be like this? That's for yourself to answer. And if you're still trying to know more about me, you will get it in time for sure. But let me come back to this document, and then I'll go over to the comments. So again, no more than 4 to 6 inquiries per bureau in the last 6 months, preferably have less. No bankruptcies in the last 7 years. So no bankruptcies here within those past 7. And for many of you, again, that I've already spoken with, this wouldn't work because I know your situation. I know why you had to declare bankruptcy. I know why there are foreclosures. I know why there are open federal tax liens. I know your circumstances. So you're different. I've taken care of you. I understand you. I know you. I know what you're trying to accomplish. I'm not just looking at it from, I want to make money. No, I'm here for you. I never raised my tonality this way. I haven't been brought up to ever be negative. I haven't been brought up to be cocky. I haven't been brought up to be mean with people. I give people the benefit of the doubt, probably more than most. But when it's time for me to get in, if you're not being cooperative, what the heck are you doing wasting my energy and my time? Get out of here. Next. And I won't say that, but at the same time, it's like, what are you doing? You're dragging this out. You're waiting forever to submit what I was asking for you. You said you'd get it done. Yeah, I had to text you again. What am I doing that for? I'm not your daddy. I'm not your mommy. But at the same time, I'm not trying to be negative. I'm not like that. It's just me saying, hey, I'm a punctual person. Are you going to match that, or at least somewhere there? Or like, what is this? Is this the Titanic boat sinking, but I don't have any information on what's happening? Like, I have people right now who think, oh, I'll take an alternative option. I'm not going to share it with them. And I'll ask, like, if it's okay, if you don't mind me asking, what you would be that alternative option? And if I hear that and I go, that's not what you should do, well, try it out. Go ahead. Figure it out for yourself. And then I'll be here if you have any questions. You know, I'm always open. I'm always going to collect you with open arms. So no bankruptcies within the past 7 years. No open unpaid, that's in another word, collections, liens, or judgments. Make sure you withdraw them, remove them completely, withdraw, right? You go through the IRS. We go through a form of credit repair. We have to get paperwork that states you submitted that so we can get it done much faster. Or judgments. You have defaulted. You have all these judgments in place. You haven't even done what you've been asked to do. How it works in 4 simple steps. Step 1, you will complete a form. And then this is where you will get a one-on-one consultation with the rep. Step 2, you submit your application. It's a soft pull on your credit. It's not a hard pull. Some of you are out there like, well, going to be an inquiry. Well, if this doesn't make sense to you, then don't come up with those things on your mind. Step 3, get pre-qualified in as little as 24 hours, as I said, pre-approvals and so forth. Step 4, you meet with the advisor and my team, and then you can get access to these credit lines. So I'll be there along the way. If you are not approved, you will find out why, as well as what you can do to then get approved. So you can become more of an attractive client by myself and everybody else. So it isn't like we're just leaving you like a sinking Titanic boat. If you didn't qualify, well, we're going to be told why. We'll have reasons for you and how you can use that to take to your advantage. Even if there was enough of a high fee, like you're saying 10% fee, 5% fees, There is no upfront application fee, just so you guys know that. But in different terms and different fees, I understand that. But when you are stuck upon, oh, I'm getting a 5% fee, I'm getting a 10% fee, I'm getting 15%, like you don't have necessarily a substantial use for your funds. You're thinking of this like as a home mortgage. You're thinking of this as I have too much credit I've already taken on. I have too much debt. You think I could take an additional 10? I understand that situation, your point of view. However, this is a business. This isn't, hey, I'm going to take this and I'm never going to pay it back, or I'm just going to run with this and it's not going to help me grow my profit. I'm going to go from 20 actually to 15,000 if I took this money. So what does it make sense for me to do? I'm going to be stacking on more credit card debt than I needed. Well, it doesn't make sense. So you're not justifying anything by saying that, oh, the fees are high, the interest rates are high. And I'm going to get into my next topic and we'll try to close around here before the 1 hour. I'm going to try to get closed down here. All information in the description as well. It doesn't justify, if it's your first time, it's okay. I'll guide you, I'll educate you. I'm more than happy to do that. It's never a moment to me. It's like, yes, I get to help. And so when I confront that belief of yours that I'm paying 5%, even with the ERTC program, 15% or so, what we're paying in fees, what is being deducted, what you're actually taking, are you processing the fact that you're getting it from the best of the best, the professionals? Other places they would probably scam you, perhaps charge you even more. If they charge you less, they wouldn't thoroughly get your information done and taken care of appropriately. So you have to think about, well, if even with like origination fees, you're looking at closing costs, liquidation value at closing, if it's an SBA, depends on the type of financing, pay maybe an unsecured term loan, cash advance, fees are probably $3,000, $2,000, maybe $2,000 to $3,000 for my situation, taken off at closing. So instead of the $100,000, maybe I got $98,000, which is okay. It's fine. It's $2,000 more or less, not a big deal. And so then I go, well, I'm paying fees that are, no, get it out of your system. Like if you have to, go walk about it, go talk about it. But what you're taking with you, if you are getting 98,000 in total, and you're doing around 80 to 90,000, that's a good amount to get you assessed for that if monthly wise. Well, that 90,000, you're telling me that not in the next month, but in the next 2 to 3 months, you're projecting that you're going to increase your profitability by. So now you reverse engineered it, or maybe you don't exactly know what that profitability percentage or factor profit margin will be. But hey, I took this, I was doing 85,000. Now I'm going from 85,000 to 120,000. I'm doing 90,000, or I'm just staying above waters. I just need the money. I needed to use it for some debt, refinancing, consolidation. And then the rest of it I'm using for growth and expansion. So see how that changes instantly the way you believe about how you take this money? Let me go to the comments here. And so that's part of the reason why it is high, because the fulfillment on a product like this, on the interest rates, everything that can be a little bit higher has to compensate for why the fees are a little bit more. And so it's not only for that reason, but there's a bit more that's attached to it. Now, yes, you can, definitely. You can apply for multiple businesses for different entities. That would definitely be appropriate. It's kind of like when somebody goes and applies for a cash advance and SBA loan. Well, we have to look at and address those different entities for different purposes and what money is going into those businesses independently, not like it's a conjunction, unless you're like in real estate, LLC. It's a little bit different. Depends on the industry. But most definitely appreciate you for your comments. You are welcome. Now let me come back into this. Let's transfer actually out of this document and move into another one. You guys can't see this, but I'm flipping through my other tabs. Okay. So now I want to show you guys the most amazing part. Maybe not, unless this is more of your alley, or will be. Okay, enter there. Now, you guys have probably seen this document before, so please just bear with me. And if you haven't, this will open your eyes. You'll start imagining and thinking to yourself, how did I not know about this before? If I wouldn't have gone down the route of going bankrupt or closing my business, shutting my doors, I wish I would have known this was available. Then I would have approached this in another way. But there's always time to fix your wrongs. There's always a way out of what you're doing. You just have to get the right information. if somebody's like, no, you don't qualify, like, you think, look at all these people out there, for example, who are trying to get you a product. Maybe it's a merchant cash advance on a daily and a weekly repayment. It's not bad to pay that. It just depends on your position. Are you hired to your client? How's your cash flow? Can you even afford a monthly repayment with what you're taking on, or does it even qualify for one? What do you have to get fixed to get to that point? You have to start here. That's okay. You can service the cash flow. It's fine. You know what's getting taken out. You don't get a lump sum at the end of the month because you won't be able to handle it. Others will. Now, it makes most sense to start here and then move up. Others will be like, I can start here. But you get a lot of brokers, you get a lot of agents, inexperienced individuals who are like, yeah, come get this advance because it's the only thing I know. It's going to pay me the most. And I don't give a damn about that. I care more about you. I want to hear from you in like 3 months. I want to say, Gerardo, how's your business doing? How's your publishing business going along, by the way? I want to know, how many books have you published since we last spoke? What books have you published? You told me about the direction you want to go into. How's that been? Has it made a direct impact on your revenue? Yeah. You know, I came to a realization that what you said was actually true. It took me 2 years. 2 years better than nothing, but hopefully it doesn't take you that long with me to realize that it shouldn't take you. Usually it's within the first second it snaps. And Gerardo is proof to that. He's amazing, man. Like everybody, Gerardo's taking time to even produce a form of video to reply back to one of my emails. And it's very generous and it's very raw in the sense that I got to know him. I got to know what he was going through. And it lit up a fire underneath me. Like last night, I don't want to get too sidetracked, but I almost cried. Like I thought about my dog who passed. I thought about my grandma, my grandpa. I was in my room, so nobody else can like kind of see me. Nobody else was within the room with me at the time too. So I just wanted to be to myself. And I thought about the position that I'm in life and everything. And I started to think about, how so much has changed, but how past struggles don't have to define you. And there's always something good out of those. So if you're struggling right now, whether it's has something happened personally or something happened in your business, there's always a way to get away from that. So I want you guys to realize that. But I'm going to go back into this document. I'll come into the comments in a little bit. I know head out of those in here. And for those of you who haven't commented, it's okay. Don't worry. It's not like I'm saying, hey, I'm going to pressure you to send me a comment or else I will never speak with you. So what is this hybrid SBA 7A loan option? And why do I say it's the best SBA option to get started with, depending on your situation, of course. But over 50% of the time, this is the option that I recommend to a lot of individuals because it's all we can do and all in one place. Not every SBA preferred lender does this. Not every in-house does it. So there are instances where I will show you a direct lender and other ones where I will show you, hey, I have already a partnership with this direct lender. It's just underneath more of an in-house setup, more of a brokerage setup. And it's better to do this because as opposed to going to the bank as well, I just spoke to an individual yesterday. I was on the phone with him. He said, I have a good client relationship with Bank of America, and we're thinking about getting an SBA loan, credit cards, this and that. And he was asking, what is different about doing it online through a private lender, non-banking solution, or maybe another online banking solution as opposed to going it directly physically into the location? There are plenty of them. Now, it depends on every circumstance, but a lot more flexibility is allowed. When you're going directly through the bank, through your physical location, even if you have a great relationship with, that can work. Even if you go through like online and you do the SBA.gov site, you don't want to do that. You're going to be contacted by a lot of lenders. You're going to be given a lot of options. You're going to be confused on what the am I doing? And then you're going to come to me. You're going to ask me, which is this? Is this a preferred lender? And now we're going to drag out the process. I know who we're speaking with. I know that lender. Maybe I've worked with them in the past, but you don't know exactly what you're doing. And you'll be contacted. You're unsure about this. They're going to drag out the process. There's probably a second or third part of the underwriting. When you go through the bank, that can happen where there's another part of the underwriting where if we did it online a better way in-house, or a direct lender online that I can show you with, then we go, hey, there's an elimination of that second or third underwriting step. There's a different credit memo step. Maybe they're meeting with the credit committee and they're out of touch, they're out of sync. So you're getting a lot of old generals who are saying, oh, we shouldn't give them the money. You have the person who deals with collateral, liquidity, equity, and then you have the cash flow guy or girl. And you're like, no, well, and they're so out of touch. And then there are more components of it. Those aren't just a few. Those are just a few. But I'm going to leave it there for now. And so it offers you more flexibility. It might take longer if you go this direction, but as opposed to coming to somebody like myself, whether it's directly here or we're dealing with, hey, this is the best lender to work with. It's non-banking, private lender. Maybe the rate is just a tad bit higher, which you're going to see, maybe, but it's not a significant difference. Probably like 0.1%, 0.2, 0.3. It's nothing really to get alarmed about and be like, well, it's 0.3. What I told an individual the other day is, does the benefit exceed your repayment? It's not always about the interest rates. It's this whole, like, I have a home mortgage, I want to have it for 30 years, and it's coupling. It's warming, but it isn't the end all be all. To be honest, I prefer going this other route because of the more flexibility you have, the more on the contract probably using your funds for, how you can use those funds, how much time expectation with real estate. Without real estate, in the bank, you might have to offer up collateral no matter what, put your home on the line. And you'll still see that with collateral-based options online. So I'll communicate that with you in just a moment. So this hybrid is two separate loans. One is an unsecured financing product, which it is the term loan, line of credit, or the cash advance. I'm not saying you have to get a cash advance. I'm saying it's or. Sometimes we can couple them, which can be funded easily and quickly. The other loan, it's a 10-year SBA term loan. I have a lot of these people right now who are getting these, like, they're not even thinking about it. Boom. A guy just referred me to another person. Boom. What did I do? I reached out, like, boom. He needs an SBA loan. Michael, can you please help him? I'm on top of it. Thank you, John. Appreciate you. You don't know how much this means to me. Boom. Done. But a lot of you guys are, I don't want to submit the documents. I don't want to, like, I get it if it doesn't make sense. But if I communicated to you why this is best, we're not just shooting your information around. We know specifically what we're doing. This is how the process works. I'm in contact with this lender, this underwriter, the underwriters. I'm in contact with this advisor who needs to be on the file, where we're both communicating similar information to you. You just have to hear it that way. So back to this documentation. And again, I'm not saying that to be negative. I'm saying it as in, like, this is the reality. You come to me, you'll get the best. If you want to go to somebody who will dabble with you, who will tell you, well, I'm going to fluff him up. I'm going to turn him into, what's that character from Pokemon? Puffy, I forgot the name. It'll come to me. But since I'm on a momentum with this. Now, one is the unsecured financing option, as I mentioned. Term loan, line of credit, or cash advance. And this is what a lot of people are attracted to, and this is why this is an alternative to going directly through the bank. And don't directly go through the SBA website. You're doing yourself a huge disservice, as I said, and there's a lot more reasons. God, it's it's a hassle. And what I've seen, it's crazy. And there might be some instances where it works out just fine, but it's very much a hassle. And you don't want to go that way. You won't get, usually, maybe you don't get a preferred lender. It's a lot of cases. The process, you won't be looked at. Won't be given as much flexibility that direction. Different charges and different fees, etc. So it can be funded quickly. And this is why, like I said, I speak to a lot of people. They're attracted to getting an unsecured financing solution. They're like, okay, I know about these online bank term loans, which I'm going to come out with a video here soon, if I haven't already, on the monthly, how to get a business loan with monthly repayments. I sent you guys an email recently on that. Observe your thoughts. Appreciate it, Gerardo. Yeah. 200. Yep. Nice. Yeah, you're moving up. So slowly but surely, you're getting there. And 16 books. Yeah, keep going up with volume, like you said, what your mission is. And you'll understand with quality and quantity what sticks. And you're still very much so, like, in those experimental stages. And so once you really get a handle on what works, what you are fully committed to doing, then you'll have a better understanding for sure. And appreciate you for saying that. I try to do my best. no matter what. And I know my stuff. A lot of people, I can call them out on it, but I don't. That's energy and time wasted. Why would I want to do that? And there are reviews out there, so just so you guys know, I do make those, and I want to make them so you guys know where to go and not to. Be careful. So a lot of people are attracted to this. Yeah, we can get you a line of credit. Boom. In the meantime, you can use it as bridge money if you want. So which can be funded easily and quickly, 24 hours. A lot of the times, cash advances, term loans, 1 to 2 days. Line of credit, 1 to 5. Usually 1 to 5 term loans. It depends on your file, but it can be done rather quickly. The other loan, it is a 10-year SBA term loan, which we can get a letter of intent within a couple of days, but it takes you 6 to 8 weeks for you to actually receive your funds. And so there's a lot more. Like when I'm in the trenches, as Cerrado was saying, like you'll get a lot more. Like I can only give you so much, and I can't show you guys examples of what I'm doing, like on the back end with my underwriters. Like I present to you the options, the terms, the rates. Like I just did that a couple of times yesterday. I'll be doing more of them following up here, hopefully tomorrow. But you'll know about which ones are actually like your best option. Sometimes we might give you one, we might just give you two, and we'll say, hey, you got a 10-year option here with this amount. And then you have a second option where you can get a 25-year term with real estate included. And you're thinking, oh, which one's the best? Oh, I'll take number 2. I don't mind it with real estate. Yeah, let's do that. It's okay for you to do that. Perhaps you're looking at a form of collateral, a form of real estate financing, and you're willing to do that because I want more money, but I want probably longer terms. I'm okay with doing that. I'm okay with taking that amount of debt on. And you're like, oh my God, I still have a line of credit I got to approve for. Even if you don't want to take it, I still recommend going this direction. A lot of individuals maybe think, okay, I don't get approved for one, so let's go a different way. And there might be an instance where I go, hey, there's this direct lender here where I'm going to work with the SBA, and then this one, we can take you in and get you an unsecured financing option. But we could do this all in one place, so you don't have to worry about going everywhere and anywhere. There's some instances where that may make most sense. So again, we can do that as bridge money and get a letter of intent within a couple of days, but it takes 6 to 8 weeks for you to receive your funds, and that's kind of more common, the SBA. So our SBA loans, they go up to $5 million, and this is an SBA 7A loan we're focused on. I like 504. Usually see 504s with like 5 million, kind of the same more or less in this market. You'll also see up to like 22 million with a few rare circumstances. So a business needs to be generating at least 120K year in gross revenue and have a 660 plus FICO credit score. And that's more realistically for the unsecured financing product. So 120 year, you're looking at the line of credit, term loan, cash advance. But realistically, you want to be doing north of 400K in annual gross revenue. And a 680 plus FICO is what you want to get approved for a line of credit or for a SBA 7A loan, primarily here. You also want to have 2+ years in business. So it's 2+ years. You want to have a 680 plus in FICO credit score. You want to have annual wise, you want to be doing north of 400, more so 500,000 in annual gross revenue. We're not talking about net income here right now, but we'll go into profitability in a moment. So yeah, you can get in with the 650, in some cases 660, but you'll be limited. You probably will get an express loan instead of getting the standard loan like you were hoping of getting $1 million, 700, 800, above 350,000. You're going to be getting more so those 20 to 30 to 250 or 30 to 350,000 because you have less than a desirable credit. Unless you have the collateral to match more of what you want, then it'll be more difficult. But there are a lot of cases where different lenders look at it differently, but you ideally want to have a 680 and above to get more though. And I'm speaking towards like 350,000 and above in most cases, unless you want those express loans. Sometimes we can work it out with 650, but I'll get into more details now. In addition, we will need to see the 3 most recent business tax returns. I will need to see them, as well, of course, the underwriters, lenders, and 3 most recent years in year-to-date financial statements. The SBA will go primarily off of credit score. And what I mean by credit score is like your credit reports as well. And when you have a credit score saying 660, 680, 650, well, it's more of a morality. It's more of a characteristic issue. We want to see what kind of pattern you have in making your payments, paying your bills on time, any late payments. A lot of it, I used to always ask for credit reports, consumer credit reports. I used to even see business credit reports, but it's been now lately where I don't always have to ask for them directly. It might be asked for a different part of the process, specifically with SBA loans. And if we need to do a hard pull, usually we'll tell you about what that entails. So the SBA goes off primarily off of credit score and profitability of the business. And you should know that when you're dealing with SBA government-backed loans, these are usually a hard pull. So the SBA goes off of credit score, but when we do an in-house setup, we can usually get to an assessment, get to a pre-evaluation before even doing a kind of credit assessment, I should say. So the SBA goes off primarily of a credit score and profitability of the business. You shouldn't be looking at doing about 2 years of profitability, if not more. And the most recent is best. So if you're doing 2019, I'm profitable. 2020, I wasn't. 2021, I was. Well, it's kind of hard. What are you doing now? What are you projecting? Well, your net operating income, your net income total, you're negative. Like, even if you were doing good, like, we don't have a recent amount of history to show us. Like, you're flip-flopping. What will it be next year after that? If we're giving you 5 years, what do you think you'll do in 2 years from now? It's showing us a bad pattern already. You're taking on different projects you shouldn't be taking on. So the 3 most recent business tax returns, and that information is right there for you. Note, if you already have an existing business loan that is not idle, we can refinance it up to 2 merchant cash advances. Consolidation, what I want to say here, for those of you who are like, well, it's good and all, but can I consolidate it once I get the SBA loan? Yeah, you can. If you get an unsecured financing option, or you get a line of credit, for example, a lot of people do this. Term loan, line of credit, cash advance. One person gets a line of credit, $150,000. Now they got approved for an SBA loan. They're going to take $2-3 million, however much they get. Well, they can then consolidate, put everything they got for the line of credit, put it underneath the SBA loan, pay it off, stretches out their term. It's much better. Or you can keep that line of credit separate, however you decide. And think about, well, if I only paid this for 3 months, I got 12% interest for 12 months. I'm only paying 3%. Oh my God. Or I'm only 6 months in, I only have 6% interest on this. This is freaking incredible. And you're telling me I can then have it all into the SBA? Wow. So think about it like that. And if you needed the money right away, it makes sense. Our SBA loans, what they go up to, you see all that. Benefits, monthly repayment, fixed interest, but it could be variable. You see a lot of that these days. A lot of it being variable, 90% and above. Because market shifts. We have to address it quarterly every 90 or so days. As the market keeps shifting right now, sometimes every 90 days per quarter if it's need be. Prime rates, plus 2.75 or plus 1 to 2.75%, usually it's 2.75. So in today's market, around 5.5 plus 2.75. But if it increases, it'll be different. So more like 7 to 9.5 or 7.5 to 9.5% plus. It can even be a little bit higher, especially with variable. Or even a little higher than 9% based on variable and if the interest rate increased right now. You can still apply for this if you have an EIDL loan, as it is not affected, and you have a merchant cash advance or advances or other loans. SBA can look at consolidating. You just have to see how much remaining balance you have. Are you over leveraged? Can we fully take on all of that? You have to pay one part off first of this amount. Underwriting checks. Credit is what gets people. SBA 7A loans are based off of profit. You have to be profitable for 2 years, sometimes at least 10%. Plus, low debt to income ratio, less than 43%, and in many cases, less than 30%. And lower numbers are best. Low credit utilization, less than 30% credit utilization, but keep it very minimal. Now, I'm going to kind of just go through this quickly because of time, but I made another piece of content on this. I'll link you guys to it down below where I'll walk you through more of this and more. But you guys can see that if you guys want to rewind it and look there. So over here on the collateral part, excuse me, I spoke about FICO SBSS scores. Business credit is important to you guys here. Having a good to decent paydex score, FICO SBSS score, business liquid credit, that gets determined when you're in the underwriting. You can't really see that a lot by looking it up. So if you're getting over 350K, usually you don't have to be assessed by that, but it will weigh a little bit. You just have to have a good personal business credit. You have to look at those two. Collateral is not the primary part of the SBA. It uses to determine if you get approved. Rather, it's cash flow first, equity, liquidity, and then the collateral. It can be a little bit more of an infusion. So if your cash flow is strong enough, then you can help service the debt. There are lenders out there who won't take on collateral. They might need to see an assets and liabilities report, but they won't want to take on the collateral. Your cash flow is sufficient enough to service the debt that we're going to give you. But to a degree, collateral is something that the SBA requires. It's lenders to pledge. The borrower should pledge. Collateral can take on all shapes and sizes, like putting a second mortgage on your house for the lender. You can also put a UCC filing on equipment. There's unpaid invoices, inventory, leasehold improvements. Sometimes if it's not fully collateralized, the lender may require a life insurance policy, a term life, or other real estate you own free and clear. Or if you don't own it free and clear, we might put a lien on that or those that you have. Any loan over 25K, that's usually secured with collateral. Also, not have issues with public records, cash flow demonstrated by 2 years of tax returns, credit reports, and interim financial data. There will be profit. I'll go into documents in a little bit, but there's a little bit more. I'm going to go through this rather quickly because you guys likely have seen this, or I'll have more information down below. You can use SBA loans for no investment property use, such as an apartment complex, single-family homes, or any other kind of a commercial real estate that is not owner-occupied, not. So they do also SBA 7A commercial real estates. Documents that are needed are right there. I'm not going to get into it too much, but I want to actually this on top because I added a few things at the beginning. This can be done a little bit throughout the process, but personal financial statement, that's short for PFS. And then debt schedule, similar to what I had above, but if we do it in-house, we might ask you of one. But if you have no debt, then you might not even need one. No aging AR/AP reports, if applicable, again. And then application, I'll send you that. And you see all these statements and tax returns information that I'm going to need. So if you meet these requirements and you're willing to be patient enough, that's what I go into it. The different types of products with this unsecured, I kind of go into a bit of the percentage-wise. But I'm going to go through this rather quickly. In the application, sometimes we'll need a digital app to be submitted. Sometimes I'll just collect your information and we'll upload it into our portal. Other cases, I'm going to need you to submit the digital app, and there might be a hard copy, so I'm going to need those. And just a little bit more. Now, let me get out of this screen. I think I have one more, and I'm going to close up shop here on the monthly repayments. Okay. Oh, we've gone way over time. Appreciate you guys, though, for being here. All right. So this is just one program of many. And this doesn't go for every type, but if we're looking at like a hybrid cash advance type of product, even a merchant cash advance, but this one's more flexible, they're usually 50% less expensive. What you're looking at are some of the underwriting details, and there's more to this that you'll know. The terms are usually dependent on business type, revenue, and credit. So if you are not eligible for a monthly repayment, whether it makes sense to you or not, well, like I'm taking on a lot of debt, why add more stress to you with the monthly repayment? It doesn't make sense. And then you're going to be paying more towards the interest, usually with monthly types of repayments. It could be 50 to 60 to 70,000 plus more, or so, 10, 20, when you're paying more towards the interest. It just has to benefit you. So AB paper, you've heard me probably say this, for a weekly daily repayment, you get 12 to 24 months. You must have 50,000 plus in monthly revenue, a 675 plus FICO credit score, 1+ years in business. C paper, weekly, you get a daily repayment, either or, 7 to 11 months. You must have 25K plus in monthly revenue, 600 plus FICO credit score, 6+ months in business to get 7 to 11 months. Right, weekly or daily. It's not always your choice. Sometimes it is, if you're strong enough. But you have to start somewhere, don't you? D paper, daily payments, 4 to 6 months. You must have 15K plus per month in revenue. Do you have 500 plus in FICO credit score? 4+ months in business. So this is the very low, higher risk profile. Why are we going to give you 3 years when you don't have the revenue, you don't have the right credit? You're going to close your account. You're going to go into a default. We know better than that. For rates, here are more of the rates in our underwriting process. And again, this is for one specific product. 1.19 to 1.3, A paper lending clients. Clients with greater revenue over 50K plus in monthly revenue consistently over 3 or so months. Looking at excellent FICO credit score, 700 and above, and been in business 24 plus months is what you can expect as a payback rate. 1.31 to 1.49. So you can kind of look at this and say that's 19 to 30%, 31 to 9% interest. And these are more of these cash advance products. So if that solution makes most sense to you, then this is what it'll be. And by no means is that bad. Again, the benefit has to exceed the repayment. So if you're taking 20,000, you're paying back 27 to 30,000. Well, that 20,000, I'm turning it around for 40,000 consistently or a season. So what's the issue? Your issue is you don't understand your finances. Your financial aptitude. It's hard. I get it when you're working in the trenches as a business owner. You're handling this. You have to drive the trucks. You're doing everything. the last thing you want to know, how is my business operating? How is it doing financially? Of course you want to know, but do you fully understand what you can take on? Have you sat down with your CPA, the person handling this? No, probably not, or not to a degree. So that's why it ends up happening this way. And sometimes you get up to 70% interest, even a little bit more in some cases. But are you a high risk? That's the question. B paper, client with revenue above 20K, but doing 625 FICO. You've been in business 12 months. Listen, if you're fighting inch in tooth, get your FICO score up. Don't come and say, well, I wanted to get better terms. And well, you're fluctuating, man. Like you just don't understand that you're taking on more debt than what you can chew. You're not going to give us the repayment. You're going to complain. You're going to ask for a deferment. You're going to say, hey, well, I have a great connection with you. Why can't I get? You're going to be that person. I'm not saying it can't completely be done if you're a proven customer with us, or a client, I should say. But you shouldn't be asking for a lot of that, to be honest with you. C paper is a client with 525 plus FICO credit score. D paper is a client with below 525. Rates that you get, they're dependent on FICO, time in business, other credit issues such as past bankruptcies, if any, or number of current delinquencies. Lender partners, they take into consideration time in business and monthly revenue dips when determining your rate. Other issues that may affect your rate you get are the number of current funding positions, number of NSFs, and that's non-sufficient funds, of negative days, bank days, number of inquiries on credit from other lenders that we see, daily balances, along with a few other factors. Also, most recently, the state of the economy and the market. Like you may get less funding with lesser terms, and that's what we're seeing all across the industries. You may get maybe a better rate, but the rates, then again, you have to think about the benefit, not the exact rate of all this. So with that being said, I'm going to end it on a few notes here. Transition to this document, and we'll close up shop. Oh, one other thing. So if you don't get these monthly repayments, I'll be coming out with this video. You have to understand that if you're not doing, like, there's a product out here with my lender where we can evaluate you at doing $25,000 in deposits per month, and if you do the numbers, or $300,000 in annual gross revenue, with usually a 660 FICO score plus 2+ years in business, no bankruptcies, foreclosures, liens in the last 3 years or so. So there's a little bit more to that, like business credit you want to have because it'll report to the business credit agencies. So not just with one, but you want to have that. You want to have some establishment. And so you have to think about that. And in the cash advance field, you probably could get 12 to 24 months. Like with that term loan product, unsecured, you get 1 to 2 years usually in today's market, or 1 to 3 years, sometimes pushing it out. It makes most sense for the equipment. It's higher piece equipment. The return on this investment makes most sense because the banks aren't lending that amount. Sometimes there's online bank term loan solutions, which you'll learn more about, with your choice of 2 to 3, 5, sometimes 7 years. But are you a bankable client? Are you going to be able to go through all the hoops and hurdles? Maybe they won't ask for specifically collateral. It's a bit different flexibility, but there's quite a bit, and you probably won't want to go in that direction. Rates, they can start at 6.99%, probably 7 to 13%. Depends on the type of purchase. Sometimes they go from 6% up to 30%. So it makes better sense to go with these other options in a lot of cases. And you don't always need, you think you need 3 years, 4 years. And if it makes sense, then it does. But if you're like, well, I can do this and I can get the return on my investment, I can pay this back in 15 months. All I needed is 24 months. Somebody else is like, well, I need more because if I get a longer term, that means I drop my repayment. That's what you're just fixated on. But what is actually the return on your investment in the short and or long term? I want to know that. Then I will make a better conclusion on what you should actually be doing. You're just fearing that, oh, I see all these EIDL loans getting longer terms, but you have to play at it and go, if I started with 15 months, I paid this, I get another additional 4 to 5 or so months. I'm building to 24, 28, 30, 36. That's the game you play. If you're not willing to do that, keep looking. You're going to keep fighting for the lowest price. So here's a documentation or form. So you've likely seen this already, and if you filled it out, I'll get back to you. And if I haven't, please be patient with me. Tomorrow's Friday. It's my catch-up day as well, Saturday. Plenty of you guys to get back to. Now, get the funding your business needs fast. Complete this questionnaire form below to get a personalized and customized email response for your best funding option and options. Plus, you'll get a free 6-step pre-approval lending checklist to get you approved for funding much faster. So it'll look like this more or less. Let me split this over. What you're seeing from top to bottom, your name, to any additional notes you'd like to share with me. Exact use of funds, expectations, etc. If for expansion, please specify. If nothing, put none, or input none if not. But if you're going to select from the drop down here, you're using this for expansion, I want to know. You may be more comfortable saying it over the phone. You may need to hear my voice so I can really hear you out, which is okay. But every single time, it doesn't have to be that way. And believe me, I am legitimate at what I do. So you can get your point across by putting it in the additional notes. There's too much to share, but you shared with me enough. That's fine. Maybe you needed to get on a phone call. But a lot of these times, it doesn't need to be a phone call. I can show you everything. I can get it done for you like this. And there are those instances where it does make sense to do a quick phone call or so forth, but not in all cases. So it's very safe and secure. I'm not a creditor at all. This is very safe and secure. It's not an application. So you don't have to worry about that. This is for me to analyze and evaluate what your best funding option and options will be. And I'll email you back on that. That's how it'll work. So you'll have all those options. It'll be more specific. So that's why I'm not always that specific on a phone call, because I tell people that you'll have the information via email. So time in business is a years or months, FICO, lowest monthly revenue, average monthly revenue, daily bank balances, and a few more bits of information. Could change a little bit over time to look, but you'll see it's there. Now, submit it. You can get started on the thank you page right away. Those options are available, so you can get in and out. And then our services, there's also a lot more that I offer. How it works: submit a funding form for funding, get a pre-approved for funding. I'll show you your option and your options via email, and you'll understand what's the best, what isn't the best, what do I not qualify for. I'll even show you those. Like, you got to get to this level, man. Like, if you're not there yet, why are you saying you want a monthly term when that's not going to happen? Based off of this, based off of your credit history, no, not going to work. Clean it up. Increase your revenue. Increase your time. Average daily bank balances matter too. Depositing frequency. Part 2, that's where I'm going to connect with you. Usually it can be done via email. I like to do that a lot. And I'm telling you guys, this is a huge process that I have that works. And it's unlike anybody else, where I'm going to show you. A lot of the time, this is going to be put out in email. And it could be a big, long email. Depends on what you bring to the table. And I'll show you. It would probably be a clipped email where I'm telling you it's a clipped email. Please click the link at the bottom. You'll see everything. But your best options will be listed at the top, or they will be listed here. I'll show you in the introduction, like where to look. So don't be like, there's a lot of information, I don't know where to. I'll tell you where to look. And then I'll have a conclusion at the bottom. You can get started like this. People who just tell me, hey, yeah, I saw it, I'm ready. They already sent me the documentation. I didn't even have to get on a phone call with them. Good. And sometimes I'll need to gather a little bit more, so I'll probably email you back, or maybe need it on a phone call. Not always. But I'm just saying, this is what's going to help you in the long run. You're going to get all the information. Step 3, you get approved, then you get funded. I'll show you where to walk through. I'll show you the application. I'll show you how to get started. I'll show you how it works. Direct lender, is it a brokerage? And or what's in your best interest? I'll show you that. So it'll look like this more or less. So quite a bit of time. This will conclude everything for today. I'm a bit tired, so you can tell. But I greatly appreciate each and every one of you for devoting your energy and your time. There's only so much of it to go around. Let's not waste it in this cloud that doesn't exist, or you're sitting on it waiting on something to happen and fall in your lap. When I've already discussed with you, you're dragging the process. You're not even being responsive. I get you're busy. You might not respond. I don't expect you to respond like that. But I get you're busy. But if this drags out, it's proven to me that you're not interested, 1, or 2, you just weren't happy with something. Usually people are not happy. I mean, like, as in they're not happy. Like, they're happy. They're not unhappy. That's what I meant to say. No, it sounded kind of different. But they're not unhappy. They're usually happy about what I present to them. You know, that kind of sounded different, but that's the fact. And so when I work with people, they're not upset about anything. It's usually because you're upset with yourself. You're upset with what you've already gone through in the past, that you don't want something to happen the same way, or you think it will. And I'm communicating with you, like, why am I going to do that? People go, well, I don't want to send you my information because I just got to know you, and I get that. And they're expecting something different. I go, well, this is going to be this way. This is how it gets secure. This is how it gets done. People tell me I'm going to go upload the statements. Where'd you go? You're a hassle. You become a burden. And that's being nice. I'm not saying it in like a negative way. Like people tell me, well, you kind of just disappeared. And you expect me to give you another 20 minutes of my time? No, get this done. And then we can speak. And I say it in a nice way. I don't ever go, get it done. Get it done. You think you're talking to a rookie? You think you're talking to somebody who's going to just give you everything? You got it wrong. You deal with the best, you're going to get their best energy and their time. You want to work with somebody who won't? Go ahead. But if you're on that fence, if you're that individual, I'm not saying you are. If you are that individual who you can't commit, you don't know enough information, I'll give you more. There's others who qualify for a different service. They go a different direction. They want land. They want a ground up construction. It's a commercial property mortgage. And we look at a cash out refinance later down the road. Then we look at this section. And then we're looking at, oh, we got a personal loan. Like you couldn't qualify for the SBA for an acquisition. Like I have a lot of people recently. Personal loan, add that. Add the bank term loan. Boom, on top. Those two together will help you get the amount you want. But you didn't see that. You didn't. You blocked yourself. You even probably told me I'm going to go my own way. Well, do it. Let's see how it goes. A lot of people end up coming back because you're fearful of what can happen. A lot of them are soft pulls, personal loans, soft pulls. Hard pulls you see with a lot of SBA loans. Lines of credit, soft pulls, a lot of cases. If there's a hard pull, we'll ask for it. We're not just going to like give you more burden on top of what you already have. Like, come on, if there's any. So I'll leave about a minute or two if anybody has any questions, comments, or concerns. You are welcome, Gerardo. Sounds good. Yeah, no, I responded back to you. You know that already. And so I made mention of what happened there. So you made sure you sent the documents to your SBA microlender in Colorado. Okay, that's good. Hopefully you get to hear back from them. I know the process is, especially with microloans, like grant, any kind of microloan program, it gets pushed out a little bit. SBA government funding, it's backed. Right now, they're very flooded. A lot of these micro lenders, community lenders, are having a tough time. So just bear with them and hopefully they can respond back to you. I see it all across different states. So about a minute, I'll leave it open. And again, guys, this isn't me being negative. Gerardo knows. A lot of you guys know who've been watching me for some time. You guys know my character. This isn't like, this is what you're getting. Sometimes when you hear the tonality, it's because I care. It's not because I want to see you guys fail. When I leave here, I'm going to go sit down. I'm probably going to lay behind this bed that we put up here, that I put up here. Or I'm going to go into the living room and just try to get up here, like back in place, recover. But when you're going to commit fully 100%. But commit when you have the information, when you know what you're doing. Not, I'm going to say I'm going to do something, but I'm not committed. Like, what the heck is that? Just to please me, you're going to say that? Don't do that. Michael, I'd like to get a little bit more information, and then I can be ready to reply. Oh, okay, done. Good. What do you need? Not, yeah, I see the application. I see these emails. I'll get started on the application right now. Oh, my goodness. And then they become unresponsive. They're like probably out there shopping. I'm going to tell you that right now. If you have a great relationship with me, you know this for a fact. You have to be careful about shopping around like that. Who you're shopping to. I wouldn't say you shouldn't. What I'm saying is who, how much, what, when, where, and then why. So you have to ask yourself, like, is it in my best benefit to give them my information or not? Usually it isn't. To be careful about who it is. So about another 30 seconds. So one thing I do want to say before I go, excuse me, my huge nostrils, or I should say my huge nose. This time it's not my big ears getting in the way. But I should say that a lot of people just try to don't cause fraudulent activity. I can find that out. I can hear it in your voice. I can see it in your emails. I can smell it. I can smell it from a mile away. Like you trying to smell me from a mile away. You're trying to like get close to me and sense what I can bring to you. It's fine. But you're asking, can you trust me? It's one question. I'm asking, I have high standards. Can I trust you? Like, yeah, you can trust me, but can I trust you? I'm not demanding you to do this. I'm not pressuring you to do it. But if you're going to commit to something, like, yeah, I'd say be careful about saying this is when and how I'm going to do it. But if you know you're going to take care of it and do it by then, I needed funding today. I needed funding tomorrow. Boom, boom, boom. Let's move. You need to get it done. I'll show you what's available. But you're just continuously just on this hamster wheel. And so a lot of people, they try to cause problems with thinking that I won't catch what they're trying to do. Like, you think you can get something really like past me. I want to see that. I want to see you test it. Don't do it. I don't recommend that. But when people are like trying to submit to me documentation, they tell me something different than what I'm seeing, or I didn't get everything. Like, you think that what you're telling me reflects what I'm seeing here on your bank statements? You're telling me you're doing 50,000, you're actually doing 20,000. I thought you had a business checking account. You have a personal account you're using for business. This is how you're transferring. Like, it's one thing you tell me something. It's one thing when I have the information. Now, how much of it you want to supply? Are we doing the high tier documentation programs, mid tier, low tier, no documents, like you have with the credit line hybrid program? And that's just one startup, non-startup program. If you want to learn more about those startup funding programs, grants and opportunities, I'll try to leave more down below. But there are personal loans, startup loans. We're looking at pay stubs, tax returns, a few other things, not just two, but there's more of them. So that's what I'm going to leave you guys with. No comments more. Look in the description for more information. You'll see that questionnaire form to get started. All other information, I'll leave you my email, but it's the best thing to do for you is to fill out that questionnaire if you haven't. If you feel you got value out of it, please give it a thumbs up. Share it with others who you feel will get value out of it. If it's a complete stranger, friend, or a family member, but you got value, you know they can rest their head on their pillow when they go to the bed. They can wake up fully charged, thankful that they don't have to struggle thinking about what they have to do, let alone going to go and apply. And if you do feel my content is helpful, again, I would greatly appreciate it if more people would know about it. I feel like, this is one of the fastest growing channels on YouTube, and I don't say that lightly. I've been seeing everything, the numbers, and it's something because of you guys that I continue to show up. It's not the money, it's the interaction. It's the focal point. When I look at X, Y, and Z, how do I get from X to then Y and then to Z? Or I have an X service, then how do I conjunct that with a Y service to get you to the Z plot? I don't want to confuse you guys with vectors and with calculus and stuff that I did back in the day. But that's everything from me in this video. Appreciate you guys for tuning in. If you haven't subscribed, please go ahead and do so. Click that bell notification icon so you do not miss any future videos I will be coming out with. And there'll be a lot of jam-packed videos that I have already produced that you guys will be like, oh, this is good. All right. So that's everything from myself. Appreciate you all. Talk to you all soon. Bye.